Okay, sorry, the recording got down here. I think I pressed something on the OBS. Anyway, let me continue. Where was I? The New Zealand dollar trade. Fairly simple continuation after we kind of took out the low. I spoke about it many times. Targeting the high basically. When I take these swing trades, I always look at the targets, always try to see these kind of a weak positionings where I could take a trade. This in hindsight, once again, this was a perfect example of that. You have this H4 kind of a cluster area. You have a weak positioning here. Market just kind of smashed through that after it reacts from it. Not a trade that I took, you are not going to take all of them, but this very similar kind of scenario in here, although this structure is for me better than just kind of fading this. Anyway, what are the other trades? The USD CAD, I believe, I spoke about this, and the BTC trade I also kind of mentioned why I took it, so we covered that. Okay, now let me actually mention a few more things. First things first, obviously, when it comes to these long-term swing moves, markets are not just kind of a it's this is the thing which a lot of people on Twitter always kind of believe to or go to, is they take a trade on a daily chart, at the level of SR or whatever, and they will believe that market went to the target, which was like couple days or couple weeks move only based because it hit the level of support and resistance. Obviously, this is not true. On a larger scales, on the larger time frames, markets are moving based on a fundamentals. So, me as a completely not a fundamental trader, although I never really paid attention to the things much. Overall, I'm trying to fix it a little bit. Let's say, there are kind of two things you can do to make little better fundamental decisions. Although, here's the thing: Bitcoin, this rally here was basically on the news that the spot ETF got denied, and yesterday, huge sell-off on ES was on the news that I don't know which news it exactly was, but it was already known news event basically. So you need to take these kind of a news releases with a little bit of a not like BTC, Bitcoin ETF denied, I'm going all in short, you need to be a little smarter about that. But it's definitely, on the other hand, kind of worth to, paying a little more attention to these things. I'm always ahead of all the news because now I trade more markets, so I know where all these kind of CPIs in New Zealand and speeches in Great Britain happening and all these things. I'm paying much more attention to these things. And also the second thing, and I will share this along the way because it's still super new to me, like I said, I am trying to read more of kind of newsletters and substacks about the kind of macro themes in the market, and overall be more kind of ahead of what has been going on. Because I think the best kind of news trades that happen is, obviously, you have this situation now in Japan, which you do a better job if you will Google it basically, because I'm pretty sure my explanation would be a a little fold, but the Japanese yen is basically decreasing quite a bit, which is resulting in this huge trend upside in the USD JPY. Once again, this is not because we broke a level of resistance here. That's kind of stupid thing to say. It's driven by the fundamentals. If you are more educated in these things, let's say, you will know the driver, which might end up help you in kind of staying in a trade a little longer. Same with when the war started, obviously. During this period, trying to fade, gold, trying to fade crude was kind of a stupid thing to do. Yet, I believe, many people did that because they didn't really understood that, during the war, they didn't understood the things that are happening in the world. So definitely, I used to be much more ignorant to these things. When I was day trading, when you are in a trade for a couple of minutes or a couple of hours, you don't really care, about the CPI numbers or stuff like that. But if you plan to hold your positions for a couple of days, couple of weeks, it's definitely something you should do. And like I said, I will share the sources that I read a little later on, once I actually see if they are any good or not. Okay. The last thing that I want to cover is are the correlations. Okay, so as you can see here, I'm trading, let's say 10-15 markets. I don't know. They are all correlated with together. It's like you are really trading. At the end of the day, you are trading the kind of risk of environments, and you are also trading a volatility, let's say, in form of like thinner and thicker markets. Which, if I go long ES, if I go long NQ, if I go long DAX, and if I go long BTC and ETH at the same time, I'm in these 5 positions, which are basically all kind of a risk-off narratives in the world. I can also short gold on top of that, and I'm looking into huge trouble if my kind of narrative is wrong. So this is something that you definitely need to pay a little attention to, and here is basically how I do it. ES and NQ, I try to not be in a both at the same time. Okay, so these kind of let me kind of go pair by pair to explain this. ES and NQ, obviously a huge correlation against each other, with DAX as well, but DAX can have this kind of a own price action because it's it's European index. What tends to happen with European indices usually is during the London hours, they have kind of their own lives before going into much bigger correlation with the US in indices once they are open. So I'm taking DAX as kind of a own thing, but ES and NQ, you are trading the same thing basically. If one fails, the second one will follow. So not in the 2 positions at the same time. I am very simple rule. I just take the one which is cleaner, as I took a long in ES. Why I didn't took it in Nasdaq as well, because Nasdaq didn't really break the high here. Okay, so simple as that. You have a cluster here, but this didn't break the structure in any sense. So no trade in NQ, but ES was valid. I decided that I will just go with it, based on other things, and I just went with the ES. I wasn't like, okay, I'm sure ES will go up, so I will just blindly buy NQ as well because it will go up as well. No. Okay, so like I said, DAX by itself, tend to trade during the European hours, tend to have this kind of its own moves, so I'm not too to kind of hang up on other things when I trade DAX. I rarely trade it. That's one of the first things. It's not the most traded thing. There are very few setups on higher time frames. You might want to add these extended trading hours so you will actually see less gaps, but from time to time you will get a nice setup here, like this QM, for example, this kind of a continuation cluster into next kind of QM. If you would add only the regular hours, there was a gap which we felt, pushed away from that. So yeah, DAX can have definitely its own kind of things besides ES and NQ. Gold I trade by itself. I trade setups on gold that I see. I don't really pay attention to any other correlations when it comes to gold. You can see I don't have a silver here, which I might add later on. If I would have silver here, it would be most likely the same case with ES and NQ. Gold and silver very much correlated. So yeah, same thing. Is there any kind of a ES NQ? It's not, because obviously what you can do, for example, if you trade gold and silver, you have a kind of this cross pair of gold silver pair, so you can then go to decide which one you think is going to outperform the second one and base your decision on that. But I prefer to just trade the setups that I see, and usually it happens only on one. Okay, so gold is kind of a standalone market. I don't really look at other things when I trade gold. Crude oil, same thing, although there is a high correlation with the USD CAD, it's an inverse correlation, but I don't pay attention to it. Okay, I know it's very well known thing in the legacy market world, but not something that I really bother with. Natural gas, it's correlated with obviously with oil, but I trade it by itself. Okay, it's been in this huge trend. It's fairly nice market, it moves a lot, so that's pretty decent thing to trade, definitely. But yeah, you kind of want to look at it with the crude oil, but not so much. Dollar index, let me actually find something for you, because I know that a lot of people look at the dollar index from the forex world and go basically with this kind of a perception that when the dollar index goes up, all these forex pairs will go down. This is not exactly a true thing, because if you go to the ICE website where you can find the official documentation, you will see that 50, obviously you can read here what the dollar index is, blah blah blah. You can see what this index is composed of. Okay, it's 57% euro. Okay, the rest is kind of a not so important really. So the dollar index is in 50% inversely correlated to Euro USD. There is not many reasons to look at the dollar index with all these other forex pairs, basically only with the euro. Also, euro has a high negative correlation with the USD Swiss, so these two things should go against each other. I am not too strict with this, but you will find out if euro goes up, USD Swiss will go down in most cases. It's fairly obvious. One of the things when I took a long here on the euro, which failed, if you take a look at the Swiss chart, which was at the time testing this cluster into this POC here. So it could be one of those nice kind of a signals to that, okay, USD Swiss making this huge nice rounded retest into the cluster with the point of control. Maybe chasing euro is not the best thing to do. You know, this is end of March 31st. This is beginning of April 4th, basically, which at the time, you know, the Swiss was just kind of a trading around this area, so it even broke the structure here on H4. So definitely a inverse correlation. You will anyway, you know, you will rather find that you are in a situation when you want a long euro and long Swiss at the same time. So something to worth paying attention to. But overall, dollar index, I don't really look at this chart too much. I'm just looking at basically just euro and traded chart. GBP, same thing. Usually they go hand in hand with euro, but you know, once again, it doesn't have to be the case. So I trade these just kind of as a single asset as well. New Zealand dollar and the Australian dollar are very highly correlated together. Therefore, it will be one of the kind of scenarios with this ES and NQ. You know, these things really go hand in hand oftentimes. So definitely, you know, you can see, for example, you know, yesterday this kind of a compression push higher. If you take a look at AUD, pretty much the same thing. If you decide to long both on a pullback, you are in a kind of a double loss sitting here. So definitely high correlation between these two. USD JPY, it's a standalone chart. It's correlated mostly with the stock market, basically. You know, so nothing really to kind of look at into other forex pairs with that. USD Swiss, you know, Swiss franc is this kind of a safe haven asset. The correlation with euro is there. Other than that, I don't really care about any other correlations. And the USD CAD, once again, I mentioned this, you know, high correlation with crude and the negative correlation with the crude oil. So when this thing goes down, you know, this thing should go down. When this thing goes up, the crude oil should go down, but I'm not really caring too much. So you can see that from legacy markets, this correlation is not too insane. You know, there are some things you need to pay attention to, but it's not so huge as when you come to crypto. When I switched, because you know, I have I'm sure you are aware of my kind of stance towards the leverage trading, basically, and how you can use the leverage, you know, to kind of offset this exchange risk and so on and so forth. And in crypto, especially, I had a bunch of money when I was day trading BTC. I had a bunch of money just kind of sitting at the different places. I'm not a huge fan of these kind of DeFi yield farmings, for example. So I usually just was using like lending on Bitfinex or FTX, which is like 4% a year or something stupid. But when I switched to the swing trading, I was like, okay, finally I can actually, you know, use all this capital that was previously just kind of sidelined, you know, or just in some spot holdings and stuff like that, to you know, run multiple positions, and you know, it will be much better use of the money, basically. But you know, crypto is so correlated together. Obviously, you have there is always a outliner kind of, you know. For example, Luna went in this huge run in the last couple of days compared to BTC, which went on much smaller run. But you know, the correlation in overall space is much bigger than here, in my opinion, which is an issue, you know. And I was kind of thinking about what I want to do and how I want to do it. This is basically what I figured out. Once again, it's pretty a new concept, so don't quote me on this too much. Definitely something that is worth kind of exploring as an option for yourself. BTC and ETH are just two kind of main things that I look at, that I trade. In most cases, even these go hand in hand with some different price action in kind of a lower time frames. ETH is thinner market, so it can run more, drop more, but overall they will go hand in hand anyway, and this is just the same thing for other altcoins as well. Also, I believe, if ETH does well, the whole kind of altcoin market does well. Therefore, you can kind of trade ETH, and which is like holding altcoins basically. Two setups, two same setups on BTC and ETH, pullback into high volume candle on the sell-off. How I deal with that is a little bit different from ES and NQ, because obviously in this case I will be only taking one trade. When this happened on crypto, I actually buy a spot in the one where I decide not to take a leverage position. Okay, this way I still have a little bit of a exposure. It's without a kind of a fixed stop. I decided to go with Bitcoin. I don't know. The BTC was just kind of having this little bit of a more decent rally. ETH was kind of struggling from the beginning, so I just decided that I will long BTC if it's going to pull back, but I bought some spot ETH basically, which I then kind of cover if we really start to break down, or I won't. That's one of the nice things in crypto, is that obviously if you are kind of believing in the space and overall you want to have some spot holdings, basically you can just kind of then dollar cost average it or whatever. That's up to you. That's not purpose of this video, but just the thing that I do. But what about the other markets? I'm not going to bid everything on a pullback. I'm not going to do the thing that Bitcoin pullback into the level that I wanted to buy. So what I will do next is I will open 20 altcoin charts and I will just bid everything. That's kind of a thing that Bitcoin will then gonna stop me out quickly, and everything will go really poorly for me, and I will lose way more money than I was anticipated first. So what I wanted to do is fairly interesting actually, and I've decided to look, besides BTC and ETH, I decided to look at these new coins, basically the ape token from Base, this GMT, this step thing. And this is, first of all, this is not something that you don't have to do. That's just kind of a extra if you want to trade more things. But these things are pretty interesting, basically, because they are all these new tokens, and once again, you need to have a little bit of understanding of how these things work, because you don't want to be trading something that is these kind of Solana altcoins that used to be like Radium and Serum or other things that are heavily invested by venture capitalist firms, basically, and they will just start dumping the tokens the minute they are at the exchanges. So you need to have a little bit of understanding of the different tokens as well to kind of be able to trade this pure kind of speculation that is happening. So from this kind of a other thing that would be what this trade is done, basically, but if you are around the crypto Twitter, the waves was another one that was heavily just kind of moving by speculation. It made this awesome kind of topping structure, which I completely missed because I didn't want to trade that at the time. But these things, you will see that they are very speculation driven, where it basically technical analysis, and you know the TA levels will work very well on these things, and also they are not going to you know, they are not going to be so correlated with the rest of the market basically. So another thing which I wanted to show you is basically, since these are really a new kind of tokens, and you know, once again, you know, they are mostly traded by retail traders who just kind of speculate on them. You can go to the websites such as Coin Analyze basically, and you can look at, you can see patterns that are going to be very easy to spot on a CVD. This doesn't have this market, right? So you can, if you add two CVDs, and you can just gonna click and drag it to another screen, so it will be, you know, at the one window. If you take a look at this GMT, I don't know why there is no more data here, but you will see these divergences very often between a spot and the futures markets, and this kind of sucks, because there is first things first, you know, you need to have a overall pattern for it. You know, you are in uptrend, you have a cluster here which you have filled, you took out the lows here, you know, you are overall nicely holding the level. You know, here you had this little bit of stop run, you are kind of breaking the structures here. You know, it's decent chart basically to play just continuation. And what can be nice a factor of confluence is, if you look at these two CVDs around this area, this spot started really to stabilize and started to bid this thing, and you know, while the futures continued to sell it. I'm really using not the best chart here. Let me just show you. I posted about this on Twitter, so I'll just show the chart there, because it was looking more cleaner for the purpose of what I wanted to show. Just give me a second. So these are the things that, you know, these kind of new altcoins that that are mostly driven by speculation will have. You know, they will respect TA quite nicely. You can use something like the CVD. This is one of the rare cases where I would use the CVD on higher time frames basically. You know, I know that I mentioned this lower time frames thing, but for these things I think it's pretty cool tool to use. You can see, you know, this is before the huge rally. You know, I posted this a week ago almost. You know, market kind of stabilize, the CVD on spot, which is the blue one, you know, starts slowly bidding, futures are still shorting. You have this kind of overall idea to long the cluster, and you know, market proceeded to go higher basically. So I feel like watching these things and overall kind of try to be on Twitter and see what's up, you know, what coins are currently kind of moving and what things people are talking about, is definitely a one of the things how to trade these kind of a shorter term momentum plays basically without getting too stuck on inside this overall market correlation basically. Okay, so this is when it comes to crypto, and I think that's about it from me. I covered everything that I wanted to talk about in a swing trading. To sum things up, you know, weekly, daily charts are the most important ones for actual levels and the trade ideas. You know, you wanna let these trades run you. It's a swing approach. You know, you are not, you know, this trade on USD is kind of funny, because obviously it's super fast move, but usually these things take a couple of days to play out. So you really want to be using solid daily and weekly levels, you know, then and then just going to H4 chart for the execution. If there is no daily and weekly level, you can trade the H4 patterns by themselves, something like shorting here towards this daily idea. But issue with that is you can lose easily the narrative of you will go short here, and then market will hit this kind of overall level where you wanted to be long, because this was your idea, is to not go short but go long. Market will hit this, you'll take profit on your shorts and be like, okay, now I will wait how this is going to set up, if there will be some long play here, and you will miss the move. So trading, and if you trade a lot of markets, you will see that these kind of daily and weekly levels, that you will find things happening, throughout the weeks. You won't be trading every day, but you will find plenty of opportunities as well. Then it's up to you to decide if you will go with this kind of a narrowed down execution process on the lower time frames. That's really up to you. Like I said, increased risk to reward with a decrease of a strike rate. Like I mentioned, for smaller accounts, when you can afford to lose, it's definitely worth doing it. For the bigger accounts, where if you make like 3R a week or something like that, and it will be enough money for you, that that's really up to you. I can, people always ask me about these things, like how much money you need, how much, but we are all living different lives essentially, so we all have different expenses and so on and so forth. So it's really hard to tell you that, but you need to kind of think about like if 1 unit of risk is, if 1 unit of risk is $1,000 and I make 3R, I'm making a 3K in a month, in a week. You need to just, it doesn't take much time to actually figure these things out, so it's not too complicated. Okay, so this is how I look at the swing charts basically, or the higher time frames, and what I believe I will be actually doing, for at least the end of this year, because like I said, I'm moving in a month and I will be traveling. I want to overall kind of enjoy a little bit more, so yeah, this is definitely the approach that I will be going with coming forward. If I will be going back to day trading, I will most likely most likely trade ES during like first couple of hours of the US Open. This is what I would do if I would be back in the day trading thing. But this swing approach doesn't take much time. On the other hand, it's one of those things, because obviously you are not trading every day, you are waiting a lot. So you can overall, I wake up, it takes me like 30 minutes, 1 hour to go through all the charts. I set limits, I set alerts, and I'm kind of done. I have this notebook and the Excel sheet where I write down everything, so I obviously not going to forget anything. But this is one of those things where you want to be active in the market, therefore you kind of you want to be trading basically, but you just have to be patient a lot of times, and you either try to get bored and take a kind of a not optimal trades, or you can I completely forgot what I wanted to say. You will either get bored and not take kind of optimal trades, or you will get kind of like scroll through the charts in 5 minutes, be like, yeah, nothing is happening, whatever, I will just wait more, and then you will miss something. To be fair, for example, this trade on AUD USD, or I showed the New Zealand dollar basically, but you had this little bit of a weekly cluster here on AUD. Is obviously getting traded through quite heavily. The New Zealand example is much better here. You know, taking out this low, there was a valid H4 setup. You know, it's happened fast, although still, you know, fast is here. You have around 4 hours to execute this trade. You know, after this candle closes, you know, you still have plenty of time to set your limits around here and play this little bit move. Although this didn't really work out that well, you know, still you could target this and make nice profit from that. So this is the thing with the high time frames. You know, you really need to be at kind of top of everything. You know, although there won't be that many trades, you know, on the other hand, you really need to pay attention to everything. One of the good kind of exercise for this is look at when the H4 candles are closing. You know, you can see if you take a look at bottom on the trading view, you know, you'll see the time of the candle close. Obviously this will differ, you know, crypto has different H4 close, forex has different H4 close, and commodities and indices have different H4 close. But what you can then do is you know, obviously not every H4 close, because you know you are sleeping throughout some of them, but the most of them during the day you can just kind of be like, okay, now this for these markets, you know, let's say that in 1 hour, when there is next in 1 hour the H4 is closing in indices and in commodities. So I could be like, okay, at 12 there is H4 close in these markets, so I will take a 15 minutes to just review how the candles closed and, you know, take a look at that and then move on, you know. And you can do this for forex, you can do this for crypto as well, and just kind of work around this kind of a cycle of H4 candles. If you don't have the time, you know, obviously there is nothing too insane is going to happen most of the times. You know, like I said, it's a swing approach, it will take time to set things up, but definitely being kind of trying to be at top of everything, although you are not really required to watch charts exactly. You know, the most prep is done in the morning and in the evening. You know, you can be done within 1 or 2 hours, and then just kind of check things passively during the day. What I do, you know, morning I look at the charts, then I do something completely different. I can come back for a lunch, take a look at things again, and then just kind of let things play out. You will see it doesn't really require much time towards the markets. Okay, so as always, you know, if you have any questions, just ask me in the Discord.